Hey everybody, DayTraderRockStar here with you, and another great video talking about the super signal, a review of today's market, and something special for tomorrow. So stay tuned and let's get this thing kicked off. Right now, you're looking at DayTraderRadio.com. That's where we broadcast live every day from 8 o'clock to 4 o'clock. And again, lots of times we do overnight shows. I'm always doing research, so head on over there, find out all you can about day trading radio. We have a great community of traders. We trade stocks, options, and futures. And right now, this video is basically a futures video because we're focusing on qualification of evaluation accounts for a lot of the traders, a lot of the members in the room. So we've been focused on a lot of the setups that come along with the ES and the MAS, and we use our special program bots to identify our areas and make it very easy to make lots of money being on the right side of the market. Now, there's a lot of other moving parts to making money in the markets, but the signals and the setups, something I deliver, and there's nothing out there better. And I truly believe that, and I think a lot of traders out there truly believe that. So we're going to show you some of those setups today and how you get them. And how, and again, just watch the show. I'll be on the air tomorrow. There's some other things that at the end of this video, there's special alerts that's going to happen tomorrow. I think we might have an opportunity to profit off the market. A big event's going to happen, but I'll tell you that in a second. So just to let you know, let's see here. I want to go to my, if you log into Day Trading Radio, I'm just going to go to the dashboard here. I want to pause this so we don't have that tunnel effect. I'll leave this one. Actually, it won't have the tunnel effect. That's the regular site. I'll have the tunnel effect down here. That's what I'm broadcasting on right now. Anyway, you're looking at the dashboard. Oh, that's my sorry about that. There we go. Down here, I just want to point out down here, when you look at the dashboard, let me bring this up a little bit higher for you, just a second, so you can see this a little closer. All right, so I made it a little bit bigger here. So in the lower left-hand corner, this is where you're going to be seeing the prop accounts being traded. This is our main trading window. So most people just watch this because this is during the day. We point out our trades. We watch our news items. We send out trade alerts. We have everything that's on our main dashboard. Up here you have your forums, your chat room over here. Don't forget, that's very important. A lot of great traders in there. So that's where you're going to be seeing the this chart down here. I'm going to switch it over. Hopefully you'll be able. You can't see it because I just closed that window, so you're not going to be able to see it. But that's the chart you'll see. And we might as well start off with this right now. This is something I actually wanted to get to. So this is important. The difference between waiting for your trade and just trying to make money in the market. Now, I want to discuss that a little bit more here. Throughout the day, there's opportunities throughout the day trading futures. And that's, again, we're going to be talking about futures. You kind of apply the same methods, and techniques to stock trading for longer term trades, swing trades, position trades. It all works. But as you know, this is not the time to be in the stocks. The markets are selling off. It's not like we're buying anything or shorting anything, but if we're going to short and buy and profit short term on the markets, the futures are the best way to do that. So this is something that we've really taken. I've taken a big enjoyment out of it because what I've developed, these signals work perfectly for people who are trying to qualify. So it becomes easy. It's an easy match to make here. So this is the market, and of course, if we look, we could zoom out, and you can see the market going. I'm just backing it up from 4 o'clock, maybe 5 o'clock. We start to look at the markets in the morning, a.m. Eastern Standard Time. Over the last few days, it's been a very, very negative bias to the markets. Every pop has been hit with some selling. The pressure to the downside is there. All right, you can see, just going back, you can see the downward slope. You can see the 200-period moving average. You can see a lot of these averages 50 to 20, and those become very important, especially with our stochastic rotations. And that has been key to identifying these super signals. All right, really a fun day today, fun day yesterday. Not stressing too much. I know people are irritated with this market, and you're like, damn. And that's because, yeah, we all have longer positions. We have position trades and stuff, but that's gonna be okay. Down the road, this is gonna turn around. We're probably gonna have a turnaround mid-October to late October, going into the fourth quarter. We have earnings season coming up in a couple weeks, so we have, I think there's some positives out there. We're very close to the rate cycle ending that hike, the hikes, maybe one more hike. That's just saying. But the market will eventually start pricing in stuff here. We'll start pricing in the end of all this and maybe possibly a turnaround somewhere down the road. Now, it doesn't really matter for us because we're trading short term. I'm trading from this area to this area. I don't care what happens tomorrow. I don't know what's going to go on tomorrow, but I'm worried about one signal at a time, waiting for our pitch. The analogies are there. I'm not going to go over them again. It's just so important to just wait for that trade and not just think, oh, this is oversold. I want to buy here. This is oversold. There is a technique that we are using. There's three setups that I like to point out to traders. All right, and they all are pretty much based off of a set of oscillators, stochastic oscillators. And again, I have a lot of videos, a lot of courses on trading divergences. So if you're interested in that and want to be more information on that, just reach out to me at ironaction@yahoo.com. But there's plenty of videos on the site for the members. You go up into the forum. So, um, so because he's saying, let's just go over a basic divergence. All right, this will blow your mind every which way. I was calling the market today. I was very focused in on the market, very, very focused. I just felt good about reading it. I wasn't in a rush to go long. I was actually looking at shorts and took some shorts. But we did recognize some good divergences, and a divergence right now is hard to come by. So when you do see one, and the market is still, you're going to get a bigger than average move. So here's a classic divergence right here. Right here, it happened right at 8. This is a great time frame. 8 o'clock going into 8:20. Then there was a 9 o'clock bounce, I believe. Right here, we had a nice bounce, and there was another divergence, and we called that one. That was the 9 o'clock bounce. Beautiful divergence right there too. The Now this divergence here, easy enough to see, gave us, let's give you the benefit of the doubt of getting in there late. Let's say 43.01, and it went up to, we'll call that 50-period moving average 43.04. Not a big move, but 3 points. Now, when you're trading the prop alerts, you have a certain amount of contracts you're able to trade. In the case of the $50,000 valuation account, it's seven contracts of the ES. So again, I kind of recommend, if you are doing the prop trading, and because of the low entry fee, there is, the $27 or the $17 you're paying for a $50,000 account, it's worth sometimes to throw it all in on a divergence. That's why we're here, is to qualify these accounts. So I highly recommend. This is two things I recommend. Going a little heavier when you have a qualified divergence doesn't mean you have to go all in on all of them. You have to really determine the upside of the market, or the market conditions, I should say. And then if the market conditions are not favorable, even though the divergence should be taken, you should be taking it off much faster. All right. Very rarely are you going to get a perfect V bottom. So lots of times you get a divergence and a pop and a pullback, maybe even going a little bit lower. But the divergence will give you a bigger move. Like when I say bigger move than the current trend, this trend is down, and this is a move down. This is a move up. This is a move down. This is a move up. This is a move down, move up, move down. Now we have the divergence. This is a move up. It's a much bigger move than the average move up. So that's what a divergence will do for you. But the rules still apply. Once you get into that overbought level, especially you're starting to see the rotation here, all three of these. This is borderline, but yeah, again, going into the open also, you have to consider that. The easy money is taking it off. You know, it doesn't matter if you get 2 points, 1 point, a half a point. You do the right thing all the time, you're going to make money. If you start to gamble and say, well, this might be the bottom, I'm going to go, and it starts to pull away from you, and say, oh, I should have took it off, I'm going to wait a second, now I'm taking a loss. That's how fast it happens. So the divergence will perform for you. Every divergence I send out with a guarantee. It will most likely work, or at least get a bigger move than the average move. All right. So here's another diversion. I ended up calling this one, and we took this diversion. It's a low and a lower low, but a much higher rotation here. You see that rotation? That's what we call a double bottom divergence. The low here on the stochastics, and the higher low on the stochastics versus the low or the equal low on the price. And even though it's not an equal low, this candle takes out the closing prices. So either way, it's a relative divergence or double bottom divergence. It qualifies for both. And this was a quad rotation. So this ended up being a super signal today. And it was right at the open. And it sometimes can be a little bit more. And it was right at 9 o'clock too, which I called a 9 o'clock bounce. When the market is down, typically, a lot in the red, over 20 points, 30 points on the S&P. Coming into that 9 o'clock, I always see a decent bounce going to 9 to 9:15. Sure enough, right at 9 o'clock, we got the bounce, but also divergence. That was a great setup. And that was a super signal. It really was. Now it moved up here, pulled back. It never took out the low of the low of the signal low. This is what we call the signal low. So that's where you always put your fail-safe stop right there. Came back and then continued to move up. And the market opened up today, and it was very strange the way it was kind of rallying up, and it was grinding up, and it just felt like you were just grinding, and then this didn't feel right, and then they pulled the rug. It felt like it was so weird. I even said, the market feels like it's in mud. And, each one of these candles is back and forth, chop, 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 chop. Then they've got to pop, chop, chop, and then they pull the rug and push it back down here. All right. So the market here starts to gain momentum to the downside and holds under that 20-period moving average. Once this goes embedded down here for more than 3 periods, the 60-10 down here, you see how embedded this was? We noticed it was embedded really fast down here. So at this point, we're pretty much only looking for bear flags. And when I say a bear flag, when this is underneath 20, and if it's the lower it is, the better, just like in a bull flag scenario, you want to short all the rotations of the 9-3. Now, you can tell how weak this was because the 9-3 never even rotated up against the 80. That's how weak this market was today. Very hard to even, it's easy to time when you get a nice rotation up. Everything acts, everything's perfect. You get the 80, this is under the 20, you get that fast little bull or bear flag. But in this case, you never got the rotation. There was a lot more weakness out there, but we definitely recognized that there was weakness. We had a divergence low here and a low here, a higher low here. And I did something today that I felt proud of. I knew that, and again, just a little bit about me, if you don't know, I've been trading a long time. Not as long as some of you, but a long time. Started in 96. Started really working on the methodology in 2005, 2006, then went on the air 2007. I started teaching. Now it's 2023. It feels like it's, a whole different time. But anyway, just as now, after all that time, that I only want to take one setup tells you something. So anyway, I had a divergence here. And what I did is understanding, my throat is gone. Excuse me. Understanding that weakness and understanding markets and being in markets for so long, the first break of the 20-period moving average of divergence brings us up to the 50. 9 times out of 10, it'll pull back off the 15, re-establish the trend to the downside. 9 times out of 10, I see it all the time. So it's very easy. Get the divergence. As we're up to the 50. I'm not going to hold it 9 times out of 10. Sometimes back in the day, you'd smoke a little hopium, hoping that it was going to break higher. But the real money is to be made is when to take it off. Now, I've given you a set of rules right now. Just the set of rules I've just given you is worth so much. But as I always say, and I will continue to always say, the weakest link in the whole method is the trader. All right. The weakest link is smoking the hopium or, fear and greed. All these things we have to, this becomes a boring trade. Oh, Johnny, sell that, wait for your trade, da da da, clean the desk, da da da, wait for everything, no excitement. Let's take a chance, let's gamble. No, there's no gamble in here. Here we had a low, here we had a higher low, we had a double bottom right here. Look at that, look at this nice move here. The market's been going down the whole day, big, and then all of a sudden we get another divergence there. Took that divergence and we ran. We got through the 20. We got through the 50 at this point. When we get up to the 50 and we're not into an overbought level yet, that's why you think, and you're also watching the 60-10. The 60-10 has become one of the most important indicators for me because you had a low here and you had a low here, you had a low here, a higher low here. Same thing on the 14.3, the 9.3 definitely, and the 43, you could see it there, but very a decent divergence. Got a mosquito in here, sorry. Fighting with a mosquito. I have all the windows open at the office. Mark is making the house. All right, so we're gonna get to that in a second. So we have a nice rally up, and at one point you want to try to follow it up, take profits on the way up. If you want to, I mean, is there a reason here why we would call a bottom? That's the question. Is it a good bottom? I don't know what we were thinking. We were probably looking at the 5-minute, looking at some other levels, 200-period moving average, trend lines, and everything take place on a bigger time frame. So at this point, it was lunchtime. I had to step out of the office, and I stepped out, and right when I came back right at 11 or 1, right at 2 o'clock. The market was hitting the lows. And that was, just kind of glad. I was kind of like, all right, I just came back. I didn't get involved in all this. There was not much here anyway. I look back at it. And now we're embedded here. And you could feel the weakness in this market. Like, whoa, this is pretty stinky. But then again, here we have a low, a lower low, a higher low, higher low. Yeah. I mean, that's under 20. That's borderline, but it's definitely a good angle to that. When we talk about an angle, we take a line from there to there. It is a good divergence. You qualify, and all you have to do, and here's another lesson for you. If you get a divergence and you're like, well, I don't feel this is going to work, the worst thing you do is put a stop a tick under that divergence low. Because if it's a true divergence, that low will hold. That's the higher low. So a very easy area to place a stop. All right. Here we go. Sell side divergence. Caught it. Here's your high. Here's your lower high. Here's your high. Here's your higher high. Perfect sell side divergence. And then even almost a double bottom, double top here. Those are the fast little boom up here. I remember seeing all this. This was like came in so clear today. So market here continue to move on. And then we have another rule that we pay attention to. It's called the 2 o'clock low brings the 4 o'clock low. So let's take a look here. We actually had that rollover, and we came right into 4 o'clock, kind of selling off, and then right about 3:40, we started to rally up here. Right at the end of the day, last 20 minutes, we did get a little bounce and push back up. So that's how we run our day. We're taking opportunities. If you trade in like 7 contracts and you're getting 10 points, that's 3,000. You can qualify in just a couple of days of your evaluation accounts. But what you're gonna do is you're gonna take trades because you're gonna try to reinvent the wheel. And there's nothing better than the wheel that I'm rolling to you right now. All right, there isn't. This divergence back here, textbook at 220. So to make things even easier, I've been developing that because I love this so much. And when I say love it, I mean I love the opportunity that it's like, we have a great mousetrap. This is not going to be the holy grail, but it just gives us such a big edge. And if you could recognize that and not say, well, this thing, if it doesn't work all the time, or I let it run overnight, it doesn't give the good signals, you have to use this as a tool. It's going to give you where the divergences are, And then the other part of this is understanding market conditions. It takes experience to do that. So I never want to run the bot by itself. The bot is here to identify these zones, and then I take the trades, and then I say, well, the market's underneath the 20 period. I could program this in, and it eventually will be added to the rock bot. We're always adding things to it, you know. But you know, market experience and kind of feeling the vibe of the market means something. And some things you can't program in. So, I do like to have that control. I don't mind putting on cruise control, let the entry get executed, and then the entry taken, and then I'll take and put the stop where I want it to put, or I'll take it off earlier than what the parameters might be, defined as. Because lots of times, if you want to run the bot on your machine, you have that opportunity. If you have the NinjaTrader platform, you can run the bot on your machine. But remember, and you're going to adjust the parameters. Depending on your parameters, it's going to be how much you're going to get of these, how your trailing stop is going to be. These things take experience, takes read some other things. You could just make a big trailing stop. So what I'm saying is market conditions are going to really play a big part in how long you're going to stay in the trades. But getting into the trades is the easy part. All right. So we made, I've been working on the Rockbot, which is called the Thunderbird 5-minute divergence signal and a 1-minute divergence signal to kind of identify these. And then, so I built these scripts, and they're still in trial. I'm updating them all the time. I've just recently been working on this one, the 5-minute divergence, or otherwise known as the Thunderbird 23 by. I have them both on here. And then what we're going to do is, what I'm going to do is just going to run this. I'm just putting it on the sim account right now, just to show you the back test on this. I want to show you something. We'll put it on a real account. I see the markets actually popped up here to the high 50 profits, actually. You know what? Should I do that? All right, all right. I'm not getting distracted here. So these are the parameters. You can adjust these. You could go for 2 points. You could go for 4 points. You can go for 8 points. I'll move that down because the market, the market's been very weak. So lots of times we won't get those full rotate. I'll move it down to 6 ticks. And then we'll use 10. And then we'll have a trailing stop of 8. We'll just leave it as it. I just want to mark these spots. And I want to show you the difference between the 5-minute divergence, which is a great indicator in itself. All right. So we're going to activate it. This is, I only recommend using the 5-minute time frame for these setups. 1 minute, you're going to get great setups too, but it becomes much smaller in rotation. And if you have your parameters set a little too wide, you won't get triggered. All right. And if you don't get triggered, then you're going to roll over and stop out probably. So the parameters are more difficult on the 1 minute time frame. I think we just do this and see if there's any. This thing, is this thing on? It doesn't look like it's on. Let me just put it on here. I'll just put it on. All right, sorry I come back here with this. Things got very active here tonight. We just actually had a little divergence, and I jumped on the market here. I wish I did that live, but I was setting up my scripts to show you the different scripts, and they automatically got me into a couple of trades because I turned them on right before this move. So that was actually a good thing. So to back things up here, we're looking for certain setups. The plain old lane divergence, the buy sell divergence is up there, number one, number two. Number one, yeah, it's my go-to indicator. But I was able to kind of tighten that up a little bit more. And what I mean by tighten up is depending on, right now I have it running on the 1 minute time frame. You can run the formula any time frame. But remember, the time frames are going to be dependent on your parameters. You still get the moves and stuff, but they will be dependent on your parameters and marking conditions. So I put it on the 1 minute time frame, and I wanted to show you. It says here divergence long, divergence long, divergence long. All right, you can actually see this. It got us in. It took us off. Got us in trailing stop on the way up. Got us in trailing stop on the way up. So I didn't even. I just wanted to show you how many trades it takes. This is taking quite a few trades. Actually, if I look at these charts down here, do you see something I'm looking at where my line is down here? These stochastics are all lined up as a quad rotation right there. That was, again, after the close. And then back here, we had another quad rotation divergence, which was at what is 1915? That's 1617. I hate military time. 7:15ish. And then we got a nice move all the way up and took profits on the way up with a trailing stop right at the highs. This has worked perfect. And these are just the regular divergence, the 5-minute divergence, or the divergence. This is actually the divergence on the 1-minute time frame. So you can look at the market drop right off there. Holy crap! Look at that. Holy moly! What's going on here? Do we have some news? I know Racer's in the chat room there. Oh, you know what? Let me switch over to MES here because I've been trading the ES overnight just because it was easier. But now we got some selling here. So let's switch over. Let's go to sell market here just in case we get a move here. I don't know what's going on. I just canceled my stupid order. No, I didn't. I just canceled that. All right. All right. Just to be part of this. We're already up 130 on trading this little setup there. So just in case the market falls out as we're watching it live, which it does look like it's doing that. I gotta take my pre thing off here. So I should not have went in on that actually. Because now I'm getting emotional. I was trying to make things exciting for you. And I get sidetracked so easily on the video. So we're going to concentrate back on the video, right? This was actually a nice divergence right here. And then a big pop, and then they pulled the rug. We kind of came all the way down through this level. And now we're getting some move, some volume coming into the market at this point right now. So this is it, and I want to actually turn this over to the 5-minute time frame because typically but you can see how many trades it takes on the 1-minute time frame. You have to be careful because at a very choppy market, you're going to get a lot of different trades. Some of them will. Let me take this off. I don't want to be here while I'm doing the video. Sorry about that. The even though the setups are good, you just got to be, understanding that it's going to be very volatile. And this is, again, some of this is going to be overnight trading. So what we'd like to do is run this script on the 5-minute time frame. Let's run this on the 5-minute time frame here. Zoom out of here. There we go. And you can see there's still actually this script when it gets oversold sometimes today, actually kind of sometimes can get run over if you don't have the proper thing. On the 1-minute time frame, these were all taken, but on the 5-minute time frame, these candles were not big enough to take the profits. As you can see on the 1-minute time frame, we captured all those on a tighter time frame. If we can zoom back over here. All right, here. See that big downtrend, you're able to actually catch some of these moves and get these little bounces where on the 5-minute time frame, those bounces are only one candle, and it's not the it's not. So even though the setups are good, I found out that it became a little too choppy. So I worked on some, what I noticed here. Again, we noticed it before, but when we have what we call a quad rotation and a divergence, that is a true perfect, almost a perfect setup. All right. And nothing's going to be perfect. But now combining, so what I wanted to do is kind of make sure we don't get this chop anymore. So I wanted to add some protective coating on the Rockbot indicator here. So what I did is add my quad rotation to it. So I'm gonna click on the quad rotation here, and it's gonna overlay where the setups were. Now that the quad rotation is going to be identified by a blue line. A blue line, all right? So it's going to be easier. You can run both of these scripts at the same time, but it's all about a blue line here. All right, so as you can see, these look pretty good. I mean, this is all compressed down into a tighter chart here, but let's zoom out here. So when we get that blue line, then we have a couple things lined up here. We got a rotation starting to happen on the 60-10. We have a divergence, and we have the quad rotation. So all these are going to give us bigger moves instead of this choppy moves where you're going bing, bang, 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 and you don't have that parameters. This is going to wait for the bigger moves. In this case, it got a little bigger move, but not much. Let's just zoom back here, and you'll just get a feel for how many trades the regular 5-minute does versus how many trades. And not to say that the 5-minute is not. I mean the regular divergence on the 1 minute on the 5-minute time frame is not great. It is great in itself. It does get this off. And if you could just remember to take your profits on the rotations, you should be able to get out of all these. No problem. And some of these you're going to catch all of this. And again, it really depends on your parameters. I could probably capture most of these if I adjust my parameter. Your order submitted there somewhere. But look at this. This is the 5-minute, a lot more trades. Here to here, here to here, here to here, here all the way up, here to here. Really, every dip, it's actually smelling out a divergence. And then you have, boom, a quad divergence here. You have the divergence and a quad. And look at the size of the move on that. So you get much bigger moves, in my opinion, on these quad rotations. Here you had the 5-minute, boom, back down. Quad it doesn't come around too often, but when it does, you get bigger moves. And this was kind of a choppy, bigger move here. As you can see, there's a beautiful one right there. And you just, take it or not. You want to be alerted to these, and that's what I do. So the super signals is the one with the blue bar. It's also divergence, and it's also the one that is qualified by myself. And this is the one I'm sending out as alerts on the Day Trader Radio bot channel, the prop alert channel. So when you sign up for the prop alerts, the setup here, setup is this setup, and this is what you get. I just sent one out just before. Look what time it is. It's like 9 o'clock. Um, Again, the 5-minute continues to be very effective, very effective. And again, you can probably optimize this a little bit more, but it will capture, sometimes it will capture divergence and it won't get as much as you want before rolling over. And that, probably won't get that effect as much with the quad rotation divergence. Like here, you're going to get these big moves. Usually these super signals are going to be giving you the bottom in the markets. So I'm always want to get those out to you. Look at this move. I mean, this was probably just a couple days ago, and I've been sending some of these out. Someone emailed me the day, said thanks a lot for the update on the quad rotation. I got in myself, but that was a perfect. What do you say? It was confirming my trade. It was a great thing to see that the quad rotation and the super signal came out at the same time he got in. So it's just another indicator. If you want to have that, it is fantastic. You can have this running on your own machine too, but there is a learning curve to it. But that's what I'm here for. So that is the super signal. Today's action was let's see. I'm actually on our account here. We had about a $350 day. I was just trading the MES on our prop account, and I think I could actually, let's turn off these bots, and then it should come up with the trades I took today, and I'll outline them for you real fast. Remove all that and supply, and that should, all right, there. That leaves that leaves a very active person today. Look at this. That can't be me. I wasn't trading this much. Well, that's on a 5-minute time frame. That's why it looks that way. All right, let's go to the 1-minute time frame. There we go. All right, so here's the 1-minute time frame, and we're going to go back to today, and this is my review. This is still after 6 o'clock. We're going to go all the way till 9 o'clock. Actually, I got in at 720, or I ended up covering my short from the overnight trade. So I actually had a nice short there. So I got in and we covered right away. Then the market continued to sell off, of course, got the Rockstar effect, moved down a little bit further. And then we got down here to 810. We start to see a divergence here. There's something here. We got a little. We started dipping our toes. I think this was our first. This was our first quad rotation type of setup, and got a little bounce on it. It took a little profit, 2 point profit, and then it got out. And I was very cautious on this. And we got back in here because this was a divergence. Remember the low and the higher low, and it was also a signal. And we took that on the way up. We saw that this was embedded and this was trending up. So I got back in, got another pop, but I also understood that the 20 period moving average, once it broke the 50, and I just discussed that before, I was very proud of myself of just relying on my rules and not smoking hopium. Um, so I was able to get out right there. I think we had one left. I just closed out as it pulled back a little. And again, we kind of just when I go back and I look at these trades, I didn't trade much because the market was down and I was very comfortable just letting it sell and just waiting for our trades. And the little trades we were taking with the MES. So anything that you make on the MES, you just multiply that by 10 if you apply the ES on that. So like I said, I made 300. If all these trades were based off of the ES, it would be about 3,000 today. But I was only trading 1 to 2 MESs. All right, but you can see this divergence right here. Actually, you can smell that a mile away. I think I got in a little early, above before the divergence, but took it anyways. Then sold on the way up and then closed it. So we multiple contracts, sell on the way up, and then out as we rotate up here. Market pulls back down. This was an interesting candle. We got a pop. Um, I think there was a little candle down here too. So it's kind of a sneaky. I just got in on it. We got a pop up to 200. I took it off. I tell you, we were just in tune today. Um, Again, identifying strength in the market is another important thing. The flag, holding the 20 period moving average, holding above the 80 here. When you see that those two things, that's our another number two go-to setup. Number two go-to setup is the bull bear 2020 bull bear flag. So all these things, very simple, three good setups. Wait for them. I'll alert you to them. That's what we do each day. It was a busy day today. Here's that divergence again. I was very cautious, so we caught what we wanted to on it. Bought two, sold one, sold another one up against the 50. The 50 has been key, but we know that we always want to take that divergence. There's something just triggered there. Another buy down here. I think it was another divergence here, double bottom divergence with that candle. And we got in and we rode it all the way up. And again, it was just it was a very clean day. And then that's even 2 o'clock. Caught the bottom here. Another divergence right here. Buy, took it off, bought it again because we're holding up. Took it off, bought it again, took it off. I mean, it's okay to be wrong. It's not okay to stay wrong. Meaning that once I saw that strength coming back in, I was watching this. I was seeing this grind back up. I said, "Oh, this market's going to go. I want to get back in." So I did that, a couple times. Nice pops. Took advantage of all the pops. I got out on all the pops. Did not want to stick around in this market. Every time we got in and we got a pop, I took it off. Up against the 200, I'll take it off. Little chop here. This was a bear flag that dropped off pretty good. We sold it and then bought it. Buy down there. Here's one at this is after hours now. I did not. Is this the one right now? This was a nice divergence back here. Do you see this? Live action right here. This low and this lower low. And this much higher low. And look at this move here. 42.61 to 66. It's only 5 points. Hey, 5 points. It will take 2 points. Because if you have, 7 contracts on, do the math. All right. That's where we left off. Now the market is starting to sell off some here. Thank God I got out of that before. Market is selling off hard, and we're going to have an exciting day tomorrow. So the one thing I wanted to mention to you tomorrow, if I can bring this up on the screen. And again, if you want the Rockbot signals, if you're not a member, as a member you get these automatically. If you want the Rockbot signals delivered to you with text message and email instantaneous when the super signal goes out, not all of it's 5 minutes. I mean, if you're part of the site, you'll see the trades on the Rockbot channel, and then you have the prop channel where you can watch the live trading, and you get the alerts going out on anything I do. So and head over to Day Trading Radio. If you want to get the scripts on your machine, that's the place to go. You'll see all the instructions on how to do that over there. And I hope to see you in the chat room. So now the surprise for tomorrow. I think there might be something brewing here. Let's see. We're going to go to the dashboard here. Let me see if I can. All right. So take a look at this. FEMA and FCC plan nationwide emergency alert test for October 4th. Test message will be sent to all TVs, radios, and cell phones. How many people you think are thinking about this or know about this? This has happened before. This has happened before in the markets, and it caused the markets to go down pretty hard. I'm saying everyone in the room. I'm on DTR2. I'm actually doing a little video on DTR2, but you're welcome to tune into DTR2 right here. I figured I'd put it on there because I was using a different computer. I was using my other computer with the prop account on it. So, all right, sorry about that in the middle of the video. Tomorrow, FEMA, the FCC planned nationwide emergency alert test for October 4th. It will be sent to all TVs, radios, and cell phones. Now, just imagine, what is it going to say here? It says coordination, Look what time it is. 2:20 p.m. Eastern Standard, right in the middle of the market. You can't do that after the market. Can't do that when people are at home testing everything out. You can't do it during Oprah. I mean, maybe that is when Oprah's on. I mean, 2:20 p.m. So we could see, the market just kind of react on this. Like, what the hell is going on? Nuclear war or something? The market might spike down on this. I think it's worth it a short right before this, going into 2 o'clock. Remind me about it. Hopefully we don't miss it. But let me see. Where's my phone? Hey Siri, set a reminder for tomorrow at 2:10 for emergency broadcast service announcement.
Tomorrow to 10 p.m.
10 p.m. I said 2 p.m. Oh, it doesn't. Anyway, that was the one I wanted to just update you on that. Purpose of the test of the church system to continue to affect the means of warning the public of emergencies, national level in case October 4th is postponed due to widespread severe weather and other significant events. Back testing is October 11th. Severe? How could they have severe weather that's going to disrupt the test? For consumers, the message will appear on their phones. Will read, "This is a test of the National Wireless Emergency Alert System. No action is needed." All right, well. Well, it'll be fun to watch. Maybe the guy doesn't put down, "This is a test. This is the real deal." All right, so just want to get that out to you. And one last thing on the video. You're going to open up that prop account. You have 2 days left. The Bull and Ox account, the DTRS is the code, DTRS. Go to Bull and Ox, use the DTRS code for 90% off of everything. So that's pretty good. The option 1 trades. So tomorrow looks like maybe you could get some big swings here. Tonight we're starting to see some swings. We're already down 7. I'm going to get back to trading. I'll talk to you guys in a bit.